All right. Hello, everybody. Welcome to Coach's Playbook. Today is Tuesday, September 1st. We've made it through the meteorological summer. And, not that summer fun's done. We thought today we'd talk a little bit about the market profile with the man who perhaps knows more about it than certainly anyone I know, John Hoagland. But first, Mick, do you have a trader shout out for us today?
I do. Shout out to Maria Cam. She made about $1,200 this morning trading the NASDAQ. So great job. Keep up the good work. She's doing well in this account.
Outstanding. That's exciting to hear.
Absolutely. So it's kind of back to school time. We're going to be doing some webinars in the coming weeks. But as long as we're getting back to some of the basics, we thought now is the perfect time for the master of the market profile to share his secrets with us. So, Hoag, do you want to start kicking us off?
Well, sure. Just a kind of a basic overview of what the market profile is and where it came from. There's a guy on the floor of the Board of Trade that was actually a friend of my dad's, Pete Stottlemyre, really kind of started the whole theory of the market profile. Jim Dalton is, I'm sure a lot of you folks know that Jim Dalton is still active in the market profile, and it's just a different way to organize the information that the market provides. It's more of a view of time, price over time, and it kind of creates a bell curve. It shows you where price is spending a lot of time and where price hasn't spent a lot of time. It's a picture that can create kind of a holistic view of the marketplace. And it's something that is, like everything in trading, is a lifelong learning opportunity. I don't know if anybody's really an expert or would even say they're an expert. It seems like there's more and more to know about the market profile as you continue to get deeper and deeper into it. Pete Stottlemyre used to give my dad his levels and the things that he was looking at as far as the context of the marketplace, and that's really what the profile is. It's a context tool. It doesn't give indicators or signals to buy here and sell there. It gives more of a bigger picture of how the auction process is doing, and that's what these markets really are, just two-sided auctions. Price gets too expensive, buyers won't pay it anymore, sellers take over. Price gets too low, sellers won't sell it anymore, buyers take over, and the market profile paints a very vivid picture of that process.
That's great, Hoag. So how would you say that it sort of differs if people are more familiar perhaps with the volume profile, which comes standard on a lot of charting software or trading stuff like that? What kind of separates the traditional volume profile from the market profile?
It's a great question, and unfortunately, market profile is not available on a lot of platforms, at least not as they are. There's add-ons for market profile for NinjaTrader. There's certain platforms have it, some don't. Hearing rumors of Tradevate adding market profile charts, or TPO charts as they call them, to their platform. They're very similar and yet very different. The market profile uses price as the variable and time as the constant, whereas with volume profile, price is of course the variable and time, believe it or not, is the constant, or excuse me, volume is the constant. So it paints a kind of a similar picture. It's usually some sort of a bell curve where the extremes of the ranges, there has not been a lot of volumes spent there. In the center, there's probably, or somewhere near the center, there's probably a greater amount of volume. It points out where volume is accumulating and where volume is not accumulating. And it does kind of look similar to the market profile. I think the market profile creates or offers different information, maybe some of it better, maybe some of it not better. I mean, what's better in trading? It's how you're able to read it and how you're able to use that information to your benefit. So market profile is price over time, volume profile, price over volume.
That was extremely philosophical.
Yeah.
Yeah. What is better?
What is
Very well
better?
said, John.
Whatever works.
So I want to ask you a question, John. When looking at
Mhm.
market profile, one of the main things I know people are looking at are single prints and points of control. Would you be able to explain to us some of the importance of point of control? And when you know a point of control, how can that be interpreted by the person looking at that?
Okay. The point of control in a daytime frame profile is the widest line of TPOs closest to the center of the range. So the point of control is really viewed as the fairest price, the most visited price of the trading session. It's usually going to be where pretty close to where most of the time was spent in that given trading day. Single prints or buying tails and selling tails are areas of excess where price maybe got too expensive and then sellers came in and moved price swiftly back lower, or the opposite at the bottom. Sellers decided that was too cheap for them to sell. Buyers came and brought price back up into what's known as value. Value is where 70% of the time is spent in any given trading session. So the point of control is the fairest price. Single TPOs, single prints, buying tails or selling tails are areas where the market has changed or where excess has occurred.
John,
So
one question to follow up on those point of controls. Obviously, for those of our viewers out there that watch the forecast recap, we're using volume profile and we're talking about point of control there.
Mhm.
What is can you explain the difference between a market profile point of control and the volume profile point of control?
Yeah, 100%. The volume profile point of control is very similar to the TPO or the market profile point of control. It's the highest, it's the price with the single highest volume of the session. So it's going to be, again, probably more visited. It has created more volume. It's where buyers and sellers have been comfortable transacting business. So when you look at a volume profile next to a market profile, the points of control may be slightly different because they're using different constants, right? So the volume profile is always going to be the TPO. The point of control is always going to be that single highest price in volume, where the market profile point of control, boy, it's getting to be a
Tongue
lot to
twister
say.
there.
The market profile point of control is where the price was visited the most. It revisited that. So there's usually a little bit of a difference between the point of control and volume and TPO point of control. And it's because of that reason. The time may not be necessarily representative of where the highest volume might have been.
Now, I want to kind of talk about something that can almost bridge the gap between volume profile and market profile, which John did such a great job defining and explaining to you. There's a certain way to kind of eyeball things if you're looking at a chart to give yourself similar information to what the market profile shows, what the volume profile shows. And it comes in the form of looking at the chart and seeing price bar overlap. As you guys, I like to call them congestion areas on a chart. And whether you're looking at a 5-minute or a 15-minute or a daily chart, you're able to blow up the chart and you can see areas where a market spent a bunch of time trading. You can assume that there's a lot of volume that's traded at that area if you see a lot of candlestick price bar overlap. And then, a market might spend a bunch of time trading at a certain area, and then it might goose higher, spend a bunch of time trading at a certain area. And I like technical analysis. I like plotting annotations on my charts. All these areas where they're congestion areas, and I really don't look at market profile or volume profile. However, I could come up with a very, very similar level to someone who might be looking at market profile to define where the point of control is, just by looking at areas where there's a lot of price bar overlap. You can draw a box around one of those, spread it out across your chart. And one of the things I find most valuable with this is these points of control or congestion areas. they can be magnets for the market. If you're trading above a point of control, the market could go back to that. One of the reasons I believe that is because remember, these futures markets are created and here for the producers and the users to hedge their actual product. So price is very important. So if you spend a certain amount of time trading at a certain price, whether you can't trade below it, if the market, sells down to it, it could be found to support. Or if you're magneted and the market trades back up to a higher point of control, price is very important. So you're going to have a lot of hedging activity at those price levels, likely. So I think it's really good. Now I only like calling things support or control in hindsight. Prior to them proving that they are support or proving that they are control is something that's to be determined. But they're definitely magnets. So if you trade to one of these points of control, you see what the price action is, and if you can't break above one of those, it's resistance. If you can't go below one of them, it's support. And if you're trading at it or testing it, it's really just a magnet, and that price is very important. So that's one way to get an idea of what kind of participants might be participating at certain areas.
Yeah. Really quick, I just want to give a couple shout outs, and we do have a few questions so far. First off, Levgeny just passed step 2 of the trading combine, so big shout out there to him. We've got Nick with us, Art, Sarah. Art says he likes looking at the weekly market profile. Christopher, hey, all just started step 1, getting into the futures from traditional stock, Forex, and options trading. Super excited. So we got a new one with us. Christopher, thanks for joining us. Nick has a quick question. We have a few more after this as well. Where do you look for opportunities in market profile, John?
That's a great question. One of the things that the market profile provides, I believe, is a fair amount of context over the bigger market picture. But there's points of control, there's value area, high and low, and there's extremes of ranges that tend to offer some cheap opportunities. Of course, everything is in context. So let's say, for example, the S&Ps. We know that the S&Ps have been moving higher over time since March. If they're going to continue to move higher over time, I'm going to look for opportunities at extremes on the profiles near the lows of the extremes of the profiles for opportunities for continuation of the price moving higher. There's lots of different nuances, different features of the profile that we don't have time to really get into here that will affect the decision making. But again, it's not necessarily a buy here, sell there kind of a tool. It's more of a bigger picture context tool. I use it in conjunction with the 30-minute chart and 30-minute candlestick and technical analysis for my decision making, but it's the tool that keeps me in tune with the bigger picture, the bigger context of the market.
I like what you said there, John. One way that I use points of control or congestion areas is if you have a market that's been, having certain swings, moving up, moving down, and it looks like you're going to break out of a recent range and you see a swing low. If you look at a higher time frame chart and see past price action and you notice a point of control beneath that swing low, doesn't matter how far it is, something I would be looking at is if we take out that swing low, where can we go?
Point of control.
My first area, if I were to go short looking to cover, would be to look at cover at that point of control. As I mentioned earlier, the term magnet, likely you could find a good place to cover at that point of control, whether you cover your whole entire position there or watch to see if that old point of control or congestion area is actually support or not. If it cuts through that congestion area quickly, you might be able to keep some of your position on, take half off at the point of control to pay yourself, and then let some more of that position run. Maybe there's another point of control even below that the market might find, to be a magnet and settle there. So that's really something that I look at a lot, especially when it comes to basing a lot of trades off of daily chart.
So Mick, you're saying markets are extremely visual. Unrechecked points of control become magnets when direction starts to head that way.
I've interpreted that way. Yes.
Psychologically, that makes a lot of sense too, because if a lot of volume's done there, it goes higher. A lot of people sold there who are now getting back to scratch, and a lot of people bought there, saw their position that's in their face start going against them. So that's an important psychological level for all the volume that was traded there.
100%.
And back to the hedging, if a user wants to hedge some of the product that they're going to be purchasing, and there was hedging at that level, a while back, there will likely be hedging at that level. There's a chance that there will be hedging at that level again, because as I mentioned, price is so important when it comes to hedging.
And those points of control are so comfortable for two-sided trade that when one of them gets left behind, it always seems as though that the eyes of traders are looking for another opportunity to see if there's any business left to do at that unrechecked point of control. They just become targets. Markets are extremely visual.
Absolutely. I think this kind of covers Frank's question here. Frank's just asking if you can use POC or VOC to structure a trade. I think that kind of covers it pretty nicely there. Frank's also asking if we're going to include DAS Pro as a platform. It's not on my radar at this point, but we're always looking to add new things. So we can definitely, if you email support, let them know that's a platform you want. I'm sure it's something they can look into for you.
All right. Well, before we finish up our conversation for today, Hogue, what's your favorite resource for people that want to learn more? Because there's a lot of nuances of this we're not going to get to in 20 minutes or whatever we're talking now.
The Bible for the market profile for me is a book by the name Mind Over Markets by James Dalton. He's also got a second book that is equally as important and informative called Markets in Profile. When I first heard about market profile, my dad told me about it. I think I was in 8th grade, and he says, "Hey, there's a guy on the trading floor that's got this new way of looking at markets. Want to take a look?" I said, no, that's all right. I'm going to go skateboarding or something.
Yeah, I'm 12. No.
Right. But I was in the pit, and I was in there for a little period of time, and another friend of mine was in there, and he was doing pretty well. I was struggling, and he grabbed me outside the pit one day, and he took this book and he stuck it under my trading jacket, and he says, "Take this home, read the first 100 pages, bring this one back to me tomorrow, and then get your own copy." It was a life changer.
Right on. So that's a good place to start. So Dan, you got any quotes to throw our way to close out?
Yeah, I do. There's not very many nice quotes about market profile.
I mean, Hogue, there's like 1,000 Hogue quotes.
I could do a Hoguism, but I kind of went a different route with it being a holiday, coming into the holidays here. I kind of went with a different one from Do Zentamata. Taking time off to do nothing often brings everything into perspective. I thought that was a kind of a nice one to
very good
segue into our weekend.
Very good one.
Well, that brings some nice psychology into the mix there. Philosophy, psychology, mind over markets. Trading is very woo-woo when you get down to it. Definitely.
Absolutely.
So, as Dan mentioned, if you're in the U.S. and you have Labor Day off, have a wonderful 3-day weekend. We will be back next week, presumably. You never know. That's another philosophical thing. You got to savor every day. We'll be back next week with a different topic. And Hogue, thanks so much for talking to us about your baby.
It's my pleasure. My pleasure. It's one of my favorite subjects, and it's always a pleasure to talk.
This is why Hogue's a hit at all the hot cocktail parties. Right?
I hope I didn't
That's why my dog's always
dog
falling asleep. That's why my dog's always sleeping in the office.
Were you going to say something else there, Hogue?
No, that's it.
Oh, beautiful. Well, then I guess it's a great place to end it. Everybody have a great week and trade well.